So a lot of people ask, how actually does the news actually move the markets, right? And what news matters? Now that's the major thing, right? Most traders think that headlines move the market. I look at it as that being backwards, all right? Positioning moves the markets, and then headlines just trigger it, right? They trigger the stampede, and then they reveal what's happened afterwards, right? Just for here, for instance, inflation was hotter than expected in January, right? So now they're trying to go into a narrative of possibly, right, and needing to raise rates. That's the narrative, right? And what happens with rates raised? The market starts to drop. Wholesale inflation was hot in January. There's a message for stocks, right? And you can start seeing the key points here, right? Producer prices, final demand rose 0.5%. Now that doesn't sound a lot, right? But now that's 0.5% off of their books, right? Out of their pockets. So inflation, they have to make up for it somehow, right? And that's where inflation comes in. They pass those prices on to the consumer, right? And it goes down the chain. Then you trigger. Then on top of that, you have news that will come out on Forex Factory, right? And of course you have your calendar. That's your major predictable news. And then you have your breaking news, right? A Trump tweet or something like that. Those are the unforeseen things. And then you start to have market movement after those things happen, right? So we like to tie that whole picture together, right? And start building a narrative, right? Before you go in there and buy and sell, build a narrative, even for scalps, right? Now, again, I like to always look at the heat map to see exactly where we are overall with all assets, right? And as we can see, bonds are still going up here, right? Just dropping of the rates, right? Or is it the fleeing to safety, right? We have gold going and outperforming, of course. Oil, that's inflationary, right? Then we have your bonds are going up, right? And out of the stock. So this is pretty much a risk off picture, right? Hasn't been any movement, right? Not much movement, actually. It's just setting up, right? It seems like they're just setting up. Now we're going to take it even further, and we're going to start breaking down gold and NASDAQ. All right, so if we look at NASDAQ here, I have a few different things here plotted. I have our yearly VWAP. These are all anchored VWAPs for the year. Then for this current month, and then I do the week and then the day as well. All right. This is all in TradingView. All right. So we got the year up here. And as you can see, the reactions that start to happen from these different things, they react. All right. And then I like to plot those along. Of course, you have your psychological numbers and then your pivot points. That's pretty much all I use. All right. And then just simple breakouts and then different candle patterns, right? Which is pretty much if they're buying, if they're selling, right? So of course here at this level, you want to see selling come in, right? And then of course you could have your trend line and that'll confirm it, right? The way I look at it, if it's going to go down, if you want to sell, what has to happen? It has to go down for you to make money. If you buy, it has to go up for you to make money. Whether you're in a long term, short term, mid term, it has to do that, right? Now, there are ways that you could get paid on this sideways action using things like options and you're selling premium and different spreads and things like that. Well, if you're just in the futures, right? A lot of the prop firms, you just selling outright. So I like to get the position and see what's happening, and then we make our verdict. Just for instance, for today. Today was pretty much a good sell-off and then a bounce back here at 8:30. Right, once the market opened up, we just pretty much had this bounce back to the VWAP. Then we just chopped for the rest of the day. All right, and those type of plays is what I use the VWAP for. Right, those type of plays, just something that makes sense, and it all comes down to risk management. Right, how do you get in? How do you get out? Right, where do you get out? Right, or if you sometimes you have to give a play multiple turns. Right. You have to have it multiple chances, different points, right? So this Friday was pretty much a good, kind of choppy, but we did some longs here, and then we was done for the day, all right? We're all using the VWAP, right? And then you start having things of confluential different levels of confluence around certain levels, those odds go up, right? Because you have different players coming in, it just starts to make sense. 830 comes in, they wicked it back down again at 840, take everybody out, and then it just went on here right up to the VWAPs. And then the next thing is the whole number, 25,000, right? So 25,000 came back up here, and it's time to get out, right? No need of playing this. You can if you want on a smaller time frame, but it's no need. Catch yours and go. Now, markets move because of a few different things, all right? Main thing is going to be large positioning, right? When you look at things like gold, right? It's large positioning happening, right? Then you're going to have liquidity, right? If liquidity thin on this day, when liquidity is thin, right, they're just taking they're just wiping it all out. Then liquidity makes fast moves, right? And the stops, right? So the stops are all clustered here, and that's clearly where they're going, right? Hard to see in this moment because it's right so fast. So you have to be quick, and then you have to know how to hold these trades, right? So when this type of stuff happens, funds and big hedge funds and things like that, they are rebalancing. Right, they're rebalancing their portfolio, they're hedging, right, a lot of times using futures, and then they're doing different things behind the scenes that we have to put your inspector hat on, right? So for this week, we definitely had some nice targets hit on gold. Still looking to reach up here to the 3520s. So of course the whole number at, what's that, 5,300, right? Once we get up there to 5,300, we'll start trading lightly, but we'll see that for next week. Had a great move today. Now, a big thing I like to do is always like an intermarket analysis, right? I like to see what bonds are doing, the dollar is doing as well, and then gold, right? And those are telling me what are big movers doing, right? How is the overall market seeing risk, right? It comes down to really risk on or risk off, those two different things, right? So definitely, if you enjoyed this video, I'll definitely be sharing more of these different things. Be sure to subscribe to the video, like the video, and I'll see you in the next one. Let's get it.